Hello and welcome to a special Smaulgld episode on the Senate virtual currency hearings that occurred yesterday. Well, the SEC and the CFTC made a case for rational regulation at the Senate virtual currency hearings yesterday. Now, the focus, they heard from the head of the Commodities Futures Trading Commission and the chairman of the Securities Exchange Commission. And the focus was on unregistered initial coin offerings and bad actors. And the CFTC's general impression of cryptocurrencies, as well as the SEC's, was positive. The CFTC noted the policy must evolve in responsible ways to grow the economy and increase prosperity. The SEC added that they were optimistic about developments in financial technology and that they should embrace the technology while protecting investors. CFTC added in its supplemental materials that it labeled Bitcoin as a potential store of value and also cited the role of millennials in shaping the digital economy. Let's take a look at what transpired yesterday at the hearings. Now, you know, all along I have been saying that to the people that are arguing that the government's going to clamp down, they're going to ban, they're going to arrest people, they're going to label Bitcoin and other cryptocurrencies money laundering instruments. I've been saying that that is pretty much ridiculous because, well, let me explain why I think that. And I'll use the words of Ronald Reagan. He once said, if it moves, tax it. If it keeps moving, regulate it. And if it stops moving, subsidize it. Those are basically what bureaucrats think about anything that has the potential to make money. They want to tax it, they want to regulate it, and if they have to, they want to subsidize it. What I have been saying is that cryptocurrencies, Bitcoin, Litecoin, and the like, can be a huge source of revenues for bankers, Silicon Valley investors, traders, and also a big source of tax revenue, provided they can roll all this into payment systems, into the regulatory, and make everything such that the average Joe or the normie or the Tom, Dick, and Harry or Mary and Jane would feel comfortable going online, buying their cryptocurrencies through Charles Schwab or Fidelity, and making their profits and losses and paying their taxes on that, just like they do when they buy IBM or Apple stock. Also, what bureaucrats like to do is to pretend that they're acting in the best interest. Well, maybe not pretend. Some of them have the good faith that they don't want investors to get ripped off. So what happens is they create a regulatory environment where they act as if they are protecting you by making sure that there's information out there, bad actors are prosecuted, and then you're free, you feel comfortable to go ahead and invest. And then when you invest, that's where all the money comes from, that's where the fees come from for bankers, the fees, also the SEC makes money, they charge fees to register securities, to look over prospectuses, and so on. So let's take a look at what happened at the cryptocurrency hearings. So we had, as I mentioned, Jay Clayton was the chairman of the SEC. He showed up, as well as Christopher Giancarlo. He was the chairman of the CFTC. And prior to the testimonies, I put out a poll. These are Smaulgld followers on Twitter, not a very large sample, but I asked, when the SEC and the CFTC testify to Congress today, will they call for a ban or advocate regulation? Now, my followers are sensible, and 85% of them said they'd advocate regulation. Just as I would say, I don't think calling for a ban does anyone any good. Remember, a ban means you have to pay for its enforcement, and you get absolutely no revenue in return. Just like prohibition, you just create a criminal underclass that you're constantly chasing. Whereas if you regulate something, you can tax it, regulate it, and then spend some of that money going after bad actors. But on the whole, the government gets more money and more control by regulating something than declaring it illegal. Let's see who said what at the now, one of the things that people also, before we get into what was said, they believe, well, if the government's going to regulate this stuff, it means the party is over. No, It's just starting. In fact, when you regulate something, you actually encourage the mainstream to enter into the fray, because when you regulate something, they feel comfortable that it's legal and that they can do it. There's been a lot of information out there that governments are going to ban it, make it illegal. People feel like they may be holding contraband if they're holding cryptocurrencies. They may get arrested. The idea that the government is going to tax cryptocurrencies only scares those who either don't want to pay taxes or are evading taxes. But for most people who buy and sell stocks, bonds, and so on, they expect to pay taxes. So if they're told that there's going to be a certain tax, you remove the uncertainty that somehow they're going to get in trouble or they're going to pay fines for being engaged with cryptocurrencies. If you regulate it and you make it regular, normal, to buy cryptocurrencies through an account, and you get a tax return or tax statement at the end of the year, you simply add that onto your form, and governments love that. All right, so here's what happened. They had it was televised. It wasn't I guess it was on a live stream. I'll give you the link. You can go back and watch it yourself. It's a couple hours long. And I didn't watch the whole thing, but I read the transcripts of the SEC and the CFTC chairman, and I watched some of the questioning. But the general gist of it was very, very positive and in favor of cryptocurrency and in disfavor of fraud, which makes sense because that's their job. Their job isn't to opine whether something is inherently good or bad. In fact, the SEC puts on, when they allow a registration statement which contains a prospectus, which includes information about an initial public offering, they neither approve or disapprove of the securities. What they're doing is they're saying, we reviewed this, and we believe that the company is, through our interaction with them, has put in all the information that is required for an investor to make a good investment decision. As long as they tell you everything and you want to buy something, they're not going to opine on it, and they don't opine on it. They don't approve or disapprove of it, but at least it goes through the process. All right, so I started listening, and here's some of the things I heard. Now, they were asking, why is there volatility in Bitcoin? And I don't know why the SEC or the CFTC would have any special insight into that. It was interesting. They were asking this on the day when the stock market collapsed 1,500 points. So they weren't able to draw that distinction if they wanted to, that somehow the difference between cryptocurrencies and the stock market is the stock market's stable and cryptocurrencies are volatile. Now, the first guy I saw, and it was really of no real interest and of no value to watch him, this guy, Senator Menendez. Now, he was from New Jersey. He is from New Jersey. He recently got out of, through a mistrial, fraud charges. But this guy supposedly is a lawyer. He's pretty high up in the Senate, and he was asking how SEC could provide investor protection rate ICOs. And one of the constant themes from the SEC was, well, we need to regulate these things because ICOs are really, in most instances, they're securities, and they need to be either registered, just like IPOs, initial public offerings, or they need to have an exemption from registration. And he says if you're promoting securities through ICOs, doesn't matter, ICO, IPO, you come under the securities laws. And then he says, how come the SEC hasn't approved any crypto ETFs? Now, they would definitely be if they were presented to the SEC, and the SEC had to review all the documentation. They said they're not comfortable with the price discovery mechanisms on the other exchanges, and that's why they haven't approved ETFs. Also, he asked, why are there not more crypto products other than the Bitcoin futures? And the reasoning was, won't that help with price discovery? Which is a good point. But so these are questions that they're not hostile questions, but they're asking, why don't we have more regulation in the space, more products in the space? And basically, to give you some background, we have no products in the space other than the Bitcoin futures exchange from the CBOE and the COMEX one, and there's also Ledger has one too. But really, there are not a lot of regulated cryptocurrency products on the market. And this senator was asking, why aren't there more? And two reasons for that is the one, the why aren't there more ETFs is because they're not comfortable with price discovery. The other one's more problematic is there's a lot of products, ICOs, but they're not regulated. Well, they should be regulated by the SEC, but the issuers of these ICOs have not bothered to pay attention to security law. So that's where the focus of the issue is, that you're going to have ICOs coming out that are unregulated, they're not looked at by the SEC, they're sold to unsuspecting investors, many of them are Ponzi schemes, and many of them are just outright frauds. So I thought, well, maybe this guy knows what he's talking about. But then he asks, this really to me was, this guy's supposedly a lawyer, Menendez, that how come, what can the SEC do to stop Venezuela and Russia from issuing their own cryptocurrencies designed to avoid sanctions? Now, if you know anything about law, the United States SEC doesn't have jurisdiction over what Venezuela wants to do. And he kept poking at this question, which I thought was great because he wasn't concerned about the cryptocurrency issuances in the United States. He was worried that somehow we can't, that these Russians and Venezuelans are going to evade sanctions. And the SEC guy, Clayton, said, look, we don't have jurisdiction over it. And then the Menendez guy kept pressuring, what if you need more money to fight this stuff? And he should know better. This is not what the SEC's job is to fight if Maduro wants to issue a cryptocurrency or Russia wants to issue a cryptocurrency. Someone else asked, another senator asked, and again, this is the type of questioning, they're not going at the core of being against cryptocurrencies. They're going at this carnival atmosphere, and they want to know regarding cryptocurrency. They want to know what the SEC is going to do about it. So one of the senators asked, what they didn't ask, they mentioned this idea that Kodak and Long Island Iced Tea added blockchain to their name to pump up their stocks. And the SEC guy said, well, look, we've given warnings that you don't just change your name if you have no blockchain business plan. So again, this is just ancillary related stuff, people trying to cash in on the crypto boom, and the SEC is concerned about that, but they're not concerned about the underlying cryptocurrencies. They're concerned about the fraud surrounding them. They're not labeling cryptocurrencies themselves fraud. Another senator made a point that when virtual currencies are stolen or they're held by an offshore entity, there's really not much you can do about it. If they're stolen, we know that it's very hard to track these. These are bearer instruments. They're gone. They're probably gone forever. And then if you're dealing with an offshore entity, you go back to Menendez's question, the SEC really can't do anything if you send your Bitcoin or Ethereum for an ICO located in Nigeria. There's not much they can do. They don't have the jurisdiction in foreign countries. Then another senator, he took his time, Shelby, asking about the stock market collapsing. He really didn't focus at all on cryptocurrencies. What other questions did we have here? Okay, now Dizzy Miss Lizzie, Senator Warren. If there was anyone who was going to complain that, because the more, I would say the more big government you are, the more likely you are to want to ban stuff you don't like Bitcoin. You want to declare them frauds. I expected her maybe to take that tack, but Dizzy Miss Lizzie, she was asking about ICOs, and her characterization were some are legitimate and some are Ponzi schemes. Well, there's a point I agree with Miss Warren. She also mentioned that Facebook was banning ads because some of them are deceptive, misleading. Point 2, I agree with Dizzy Miss Lizzie. And then she asked a very key question. Again, it wasn't about banning anything. She said, how can we make ICOs safe? She asked the SEC, Mr. Clayton, are any of these ICOs registered? And Mr. Clayton said, no, they haven't been. Now, that's a problem because there's thousands of them, and many of them would easily fall under the definition of security and easily fall under the SEC's purview, and yet not one company or virtual DAO has decided that they are going to register with the SEC. This is a very important point. The SEC wants this business. Their clients, in a sense, are bankers, lawyers, accountants, Silicon Valley investors, Wall Street investors. This is their bread and butter. They want ICOs under their purview, just as they have initial public offerings under their purview. Just think of all the money that's there in preparing registration documents and prospectuses for investors. Who works on that? Lawyers, accountants, they fill all that out. Who promotes these things, sells them on Wall Street? Wall Street bankers. Who puts the money in the seed capital? Silicon Valley venture capitalists. Who looks at all this stuff? SEC. There's a workload involved. You got to hire more SEC lawyers to look at this stuff. This is big business that the SEC, the bankers, the lawyers, the accountants are missing out on. And Dizzy Miss Lizzie knows this. She's a lawyer. She knows that if there's more ICOs registered, there's more fees for bankers in Silicon Valley. She also knows, as the SEC head, Clayton knows, that spending their time going after people who haven't registered their ICOs is expensive, time-consuming, and won't lead to any fees. So what they're trying to do is warn people, warn issuers, that they need to register. They want them to come to them. And I think that's what's going to happen. By the way, I saw that Gab, the alternative to Twitter, is going to do a registered ICO. That's probably going to be the first one. If that one's successful, I think that's about $5 million. You will see a steady stream of those coming online, and they will have almost, people will think of it, although the SEC doesn't say that they approve or disapprove of anything, they will seem to have people feel more comfortable doing, buying a token from a company that has issued it pursuant to the U.S. securities laws. Some people may not care, but for institutional investors, they're not going to touch a non-registered ICO or ICO that has not been exempt from U.S. securities laws. Here is another telling thing. Chairman Clayton said, we want ICOs, we want people to raise capital, but we want them to register with us because ICOs are security. So basically saying ICOs are, they're happy for ICOs to exist as long as they're done as registered or properly as private placement, and Dizzy Miss Lizzie agreed. All right. So here's some of the takeaways here. ICOs will be scrutinized, which means fewer will come to market. The SEC has been warning about this for a while. What does that mean? If fewer ICOs come to market, it means the existing ones get more of the money. And if there's regulation, more money comes into the market and more money is going to be chasing fewer ICOs. You do the math on what normally happens when you have that dynamic. The SEC is going to take action on some of these ICOs, and they have warned investors. But the ICOs that come to market through the normal process are going to be backed by bankers, lawyers, and big investors. And this is going to mean, at least I think, is going to mean more fees for the establishment money, and it's going to mean higher prices for these types of ICOs. So you're going to get more money coming into the crypto space. And again, this is real politics, or this is basically how government works, is they can put two hats on that serves both benefits. They can act as if they're in favor of protecting investors from being defrauded. They don't want these unregistered ICOs. But also, the more important thing, I believe, is unregistered ICOs deny the SEC of registration fees, the securities lawyers of lawyer fees, the bankers of promotional fees, the accountants of accountancy fees, and Silicon Valley investors of outsized gains. They're missing out on this party. And basically, they want regulation. See, large moneyed interests always want regulation. It's a way of keeping out the small guy. So if people are thinking that the government's going to come in and crush cryptocurrencies, no, they're going to embrace them. They're going to try to get as much out of it as they can, all in the name of protecting the small guy. Now, CFTC Chairman John Carlos said, don't dismiss Bitcoin for blockchain support. Remember, if there was no Bitcoin, there would be no blockchain or distributed ledger technology. This is a huge slap in the face to people that say, I like blockchain, but I don't like Bitcoin. Well, basically, the two are inseparable, he is saying. I have a link here to what Christopher John Carlos said. Basically, he was under the impression, do no harm. Let's just take a quick look of how he concluded his prepared remarks. He basically said, look, we're entering a new digital era in the world of financial markets. It's a paradigm shift about how we think about payments, traditional financial process, and engaging in economic activities. Ignoring these developments will not make them go away. Will not make them go away, nor is it a responsible regulatory response. Bingo. He's saying you can't ignore them. You're not going to ban them. Basically, they're going to evolve. And the millennials, he's saying here, they demand serious attention because they're the ones who are embracing digital technologies. And he says, with proper balance of sound policy, regulatory oversight, and private sector innovation, new technologies will allow Americans to evolve in responsible ways and continue to grow our economy and increase prosperity. Repeating the phrases, responsible, increase technology, increase economy, increase prosperity. So that's basically what the CFT's message was, and their answers, his answers echoed those sentiments. Now, Clayton at the SEC, as I mentioned in his response to Dizzy Miss Lizzie, he was saying that he welcomes ICOs. He just wants them to be reviewed by the SEC. And here he has in his opening statement, to be clear, I'm very optimistic that developments of financial technology will help facilitate capital formation, providing promising investment opportunities for institutional and Main Street investors alike. Again, he wants ICOs. He's not trying to ban anything. And if they're regulated, he's saying we can monitor these transactions, these holdings and obligations, and basically can wear their white hat, protecting investors while also facilitating the making of massive amounts of money for investment bankers, Silicon Valley investors, Wall Street lawyers, and accountants. And he concludes, said simply, we should embrace the pursuit of technological advancement as well as new and innovative techniques for capital raising, i.e. ICOs, but not at the expense of the principles undermining our well-founded and proven approach to protecting investors and markets. So what he is saying, what they are all saying, is we just don't want fraud in this area. We want to increase our overview of it, but we want more of it, and we don't want to stop the innovation. We don't want to stop the technology. We just want to make sure we protect investors and that bankers, lawyers, accountants, Silicon Valley investors, Wall Street gets their piece of the action. Thanks for listening.